Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be here, breaking down the latest action in the markets for all you long-term investors out there. We've got a packed day with record highs, mixed economic signals, and some intriguing moves in individual stocks. So, let's dive right into what's shaping the landscape for January 9th, 2026, and how it fits into your broader wealth-building strategy. First up, let's talk about the major indexes because they're setting the tone for the market. It's been a strong day overall, with the S&P 500 and Russell 2000 soaring to record highs, reflecting a robust start to the year. The Dow Jones climbed nearly 0.5%, while the Nasdaq led the charge with almost a full percent gain. This kind of broad-based strength signals confidence among investors, even as we navigate some choppy economic data. For long-term players, this is a reminder that staying invested through these waves can pay off as markets continue to push boundaries. Zooming in on the S&P 500, we're seeing it hit new peaks, which is incredible for those of you holding diversified funds or ETFs tracking this index. History shows us that markets at all-time highs can still offer opportunities, especially if you're dollar-cost averaging into positions. The question isn't whether to buy at highs, but whether the fundamentals support further growth. And right now, there's still optimism around rate cuts and economic resilience. Over on the Nasdaq, tech isn't the only story anymore, but it's still a big driver with a near 1% jump today. While tech has taken a bit of a breather early this year, other sectors are stepping up, which we'll get to in a moment. For those of you with tech-heavy portfolios, this rotation might feel like a pause, but it's a healthy sign of a broadening rally, something that can sustain long-term growth without over-reliance on one sector. Now, let's touch on the economic backdrop shaping these moves. The December jobs report came in softer than expected, with only 50,000 jobs added, signaling a cooling labor market. However, the unemployment rate dropped to 4.4%, which eased some fears of a sharp slowdown. This mixed data keeps the Federal Reserve in focus. While a January rate cut looks unlikely, expectations for cuts later in the year are still alive. For long-term investors, this means keeping an eye on interest rate sensitivity in your holdings, especially in sectors like real estate or utilities that thrive on lower borrowing costs. Shifting gears to the day's big winners, we've got some standout performers among large caps. Intel stole the show with a massive double-digit surge, fueled by positive comments from President Trump and optimism around its role in the semiconductor space. Other chip stocks like Lam Research and Applied Materials also posted strong gains, pointing to continued strength in tech infrastructure. For long-term investors, these moves highlight the ongoing demand for AI and data center solutions, areas worth considering for portfolio exposure if you're not already in. On the flip side, not everyone's celebrating today. Among the large-cap losers, companies like ServiceNow and DoorDash saw notable declines, reflecting some profit-taking or sector-specific pressures. General Motors also slipped after announcing a hefty multi-billion-dollar charge related to scaling back EV initiatives. While short-term dips can sting, they often present buying opportunities for those with a long-term horizon, especially in names like GM, where the pivot in strategy could set up future recovery. Looking at the market movers, Intel again grabs attention with high trading volume alongside Nvidia, which held steady despite the tech rotation. Tesla also saw active trading with a solid uptick, showing investor confidence in its growth story. These names are the pulse of the market right now, and for long-term investors, they're a reminder to focus on companies with strong fundamentals and innovation, even if day-to-day volatility shakes things up. Speaking of volume, the most active stocks today reinforce the interest in tech and growth. Nvidia and Intel dominated trading activity, alongside names like Open Door Technologies, which saw a nice pop. High volume often signals where the market's attention is, and for you long-term folks, it's a cue to dig deeper into these companies' stories, beyond just the daily price action. Let's pivot to earnings, because we've got some key reports on the horizon this week. Big names like Delta Airlines and TD SYNNEX are set to release results, offering insights into travel and tech distribution sectors. Constellation Brands is also on deck, and given the consumer focus, it'll be a good gauge of spending trends. For long-term investors, earnings season is less about the immediate reaction and more about spotting trends in revenue growth or margin expansion that can compound over years.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Taking a step back to look at the past week, some large caps have been on fire. Expand Energy led with a staggering gain, while Valero Energy also posted impressive weekly growth, reflecting strength in the energy space. These short-term surges are exciting, but for long-term strategy, they're a reminder to check if these sectors align with your risk tolerance and investment goals before jumping in. On the other end of the spectrum, the past week saw some large caps struggle. NRG Energy and Guidewire Software took notable hits, possibly due to sector rotation or specific headwinds. While these dips might tempt short-term traders, long-term investors should assess whether these are temporary setbacks or signs of deeper issues before making moves. Let's wrap up with a quick look at sector performance over the past week. Energy was the clear leader, up over 4%, followed by industrials with a solid showing. This rotation away from tech into cyclical sectors like energy and consumer cyclical suggests investors are betting on economic reacceleration. For your long-term portfolio, a balanced approach across sectors can help weather these shifts. Don't put all your eggs in one basket. On the weaker side, healthcare and technology lagged behind this week, with slight declines. These sectors aren't out of the game by any means. Healthcare often offers defensive stability, and tech remains a growth engine. For long-term investors, these dips could be a chance to add to positions at better valuations, especially if you believe in their secular growth stories.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.